So then on our equipment, I'm going to make this a little smaller so we can see. You're going to list, and this is one good thing about doing this spreadsheet every year, is it's always going to be there and be a running history. So then you can always just list your equipment here. And this is where you can come up with your depreciation if it's eligible for depreciation. You list all of your equipment, yeah.
So this is all the equipment that my operational budget that we using for work. So I can't really claim any depreciation.
If it wasn't paid for by federal funds, technically you could, but it might already be past the depreciation schedule. So you can only claim depreciation on a piece of equipment for so many years.
Right, well, most of the stuff they have fairly new.
If it's used in the core, you can, as long as nobody else is claiming the depreciation on it, which. No, it's your department. If your department purchased it, it would be on the department to be able to collect for that depreciation. The university recognizes it as a depreciation expense, but they're not collecting money for it. Yeah. So you can list all of your equipment here. But so we covered last time, it doesn't matter what depreciation schedule you want to follow, you have to follow the universities. So you can't come up with your own that has a double declining depreciation so you get more up front. They do a straight line. So if you want to know your depreciation for a piece of equipment, you contact the controller's office. And they'll be able to give you what depreciation has accrued for that year.
This depreciation, they figure it out per item or per this calendar year, but I'm assuming that different equipment is different, right?
Yeah, we get a fancy little finder sample of it every year, and it lists the depreciation on there. I can use that.
Yeah, if it's the number that came from the university says this is what depreciated on that equipment, you can use that. That's what they'll give you. They'll give you a report of all the equipment in your department, and then it'll say it was purchased on this PO, and then they'll have the depreciation. So, but you have to use that number. You can't come up with your own. So so if you wanted to claim depreciation, that's where you would put it. And then if you have service contracts, so the depreciation is at the top of this equipment tab, service contracts are towards the bottom. So you would list all of your service contracts here. So we'll put $75,000 in. We'll just do one service contract for this core. We don't have any, and we won't put any depreciation in. So this is just information you can copy. We'll just put in some numbers here. Ooh, and I spelled that wrong. And you can just copy and paste it down to your tag number, your description, and then now you apply by percent, like we did on the non-personnel expenses. You apply percent based to the services. So we'll put 50% here, 25% here, and you want to do this based on how often for that service uses that piece of equipment. So now we have equipment expenses, not for purchasing equipment, but equipment expenses, either depreciation or service contracts. Now those numbers, the total will then be built into what our fees will include. So then the next tab is your year in looking at the model to see, did you have any surplus or deficit, and does it need to be built into your fees? So you'll look at your last statement for when you're doing your fees. So for us, it would probably be March 31st statement. So as of this date, what happened? So what is our carry forward? What was our carry forward from last year? And we can say none. We had no carry forward. If you did have carry forward, you would want to put that here. So some funds have a rolling balance. Your cores will have a rolling balance. If you had one, you'll put it here. What is your current year-to-date revenue? How much have you brought in revenue, and we'll say 250,000. Well, that's probably too high because I did not make a large course. We'll say 200,000. How much do you anticipate to bring through the rest of the year? So we're not, if you're looking at June 30, you could put 0 here. But since we're looking at March, let's say we're anticipated another $50,000 to come through the rest of the year. And then what subsidies, this is where we're building in our subsidies now, what subsidies are being brought into the core. So you'll add them together. If they're internal subsidies or federal subsidies, just add them together here. So that's for our revenue. Now it's asking us for our expenses. So at the time you're looking at it, what are our expenses? This includes personnel expenses and all of your supplies and reagents. So I'm going to put, we've spent $175,000 so far on supplies and reagents. How much do we anticipate to spend going forward? Let's say another $25,000. Do we have any depreciation expense? This is what have we done this year? And let's say we built in $2,000 in depreciation expense. Any other unallowable charges to the operating? So this, if you put something here, it just means you need to have some sort of subsidy coming in to cover that. But we'll say, no, we don't have any unallowable costs because we shouldn't have any unallowable costs. So it'll now take all of our revenue and income minus all of our expenses and come up with a surplus or deficit. So it's saying we have a surplus of $73,000. It's going to say, what is our 2 months working capital? And this is our 2 months, our monthly working capital is 666.67. So it says if it's less than the working capital, then we don't have to roll anything over into, hold on. I just want to make sure that these formulas are working correctly for you guys. Okay, so this is our surplus. So we'll just leave it like this. This is our surplus. This is our 2 months working capital. And if it is greater than our 2 months working capital, so this is the amount that will get rolled into our fees. Does that make sense? So because we have a surplus, it needs to be rolled into our fees. You can say, or you can choose to ignore this. This spreadsheet allows you to do that. But we should say $10,000 of our surplus is going to get rolled into our fees. If you don't want to roll it in, you can leave it at 0, but it's saying put a reason why. And then all of these notes are here describing how this works up here. Any questions so far on why we did this tab? It's mainly to figure out what is your surplus or deficit going to be to roll into your fees. So now we have our fees broken down, and we're going to put revenues by service. So now we need to allocate our revenues and our expenses from this last year and allocate them to the service lines. So that then they can get those percentages to roll into our fees. We're almost done. When we get to the summary tab, you then just put in your anticipated usage and it spits out what your fee should be after filling in all these things. Okay. So now it fills it in. Sorry. And it tells you what percent of each of those. So it has our salaries from that tab broken into percentage. So right now we're figuring out what our actual fees are per unit.